why are gold prices, why are silver prices moving, right? For the reasons that I've been laying out for years now, but it's playing out right before your eyes on this giant stage.
Hold on. What if I told you silver at $50 won't be the top? It'll be the bottom? Peter Schiff just dropped a bombshell. Once silver smashes through that double top from 1980 and 2011, $50 is going to flip from resistance into solid support. That means the days of buying silver under $50 could be gone forever. Think about it. Gold already proved this. For over a decade, $2,000 was resistance. Now, it's the new floor. Silver is about to follow the exact same path. This isn't some far-off theory. It's happening right now, in real time, as the factors Schiff has been warning about for years are exploding onto the world stage. So the big question is, what's driving this massive breakout in gold and silver? Let's hear it straight from Peter Schiff himself.
Gold finally hit a new all-time record high earlier today. We traded, I think, for the first time ever above 3,450. I don't think we quite closed above that level, just below it. But gold had a great week. It was up about 2.5%, over 2.5%. Silver had an even better week. It didn't hit a new all-time record high, but it did hit a new 13-year high. In fact, silver almost traded $40 an ounce. I think it got within about a nickel of 49. It closed around 39.80-ish. I forget exactly. In fact, I don't think they've settled it yet. I'm doing this podcast just after 4, and they're still trading. But it is a new 13-year high. This is a great close for the week and the day ahead of a holiday weekend. We've got the Labor Day holiday on Friday. In fact, I would expect a gap up in both gold and silver. I think by Tuesday, when American investors are back looking at the markets, I think that you could see a big gap up, whereas silver opens above $40 an ounce by Tuesday, and gold above 3,500. We'll see. Now, the gold stocks, again, as I mentioned on my podcast 2 weeks ago, continue to lead the way now. They're not being dragged behind like they were reluctantly, with investors completely skeptical of the gold bull and expecting it to die any day. Now, the gold stocks are leading. In fact, as of, I think, this week, gold was down about 2% during a time period where gold stocks were up 20%. Gold was just consolidating while the gold mining stocks were catching up. That's why I was hammering the table back in April, May of this year about buying the gold stocks, that was the best place to buy gold, was in the ground, because these stocks hadn't even moved yet. Well, now they're moving. And in fact, the GDX, which is the larger gold mining stocks, is now up over 87% on the year. This is shaping up to be the best year maybe ever. I mean, I guess if you went back to the 1970s, I don't know if this index, I don't think it existed back then. This is certainly the best year in the history of this ETF, and the year's not even over yet. I mean, I think that gold stocks are going to more than double as a group, which means some stocks obviously do a lot better than that if the average is a double. But right now they're up 86%, excuse me. It's the GDXJ, the juniors, that's up over 87% so far on the year. So these stocks are making a big move. The year-to-date gain on gold is now 32%. Gold is having a phenomenal year. Silver up 38%. But I think once we get above 40, we're going to make a beeline for 50. And then, as Katie bar the door once we're above 50. So don't wait. I've been hammering everybody on my podcast, on my X feed. I've been telling the guys at Schiff Gold, get on the phone, talk to your clients. They got to buy more gold and silver. And what I've been getting as feedback is that the clients have been reluctant to buy because they're worried about buying the top and they want to wait for a pullback. And I've been saying, don't wait for any pullbacks. You're not going to get any meaningful pullbacks. You just got to buy. Yes, you're buying the highs, but you're going to have to buy the highs or you're not going to buy. And the problem is the highs are going to keep getting higher. And so the longer you wait, the higher the high you're going to buy. So don't wait. In fact, remember when silver first moved above $30 an ounce, I was telling people that 30 is the new floor, that 30 on silver was like 2,000 in gold. And I was telling people when gold was at 2,000 and they were afraid to buy it because they thought it was the peak, I said, no, 2,000 is the new floor. So buying 2,000, 2,100, you're getting in near the bottom. People were afraid it was the top. I kept saying that this is a new day. This is a big bull market. You got to buy this level. And sure enough, we're almost 3,500. We're going a lot higher. Same thing with silver. Silver was 31, 32. I kept telling people, you got to buy it. It's not going to go much below 30 if it even goes below 30. So you're getting in close to the bottom. Now here we are knocking on the door of 40. Don't wait for 50, right? Yes, would it have been better if you bought it a couple of weeks ago? Sure. I tried to get you to buy it a couple of weeks ago. But if you didn't do it then, do it now, right? Why buy 50 when you could buy 40? And the move from 40 to 50, that's still a 20% gain. You buy $40 silver at $50, you got 20%. But 50 isn't going to be the top. It's nowhere near the top. In fact, I think once we get through 50, 50 will be the new 30. 50 is going to be the support for silver. You'll be lucky to be able to buy silver below 50. Right now, it's a double top from 1980 and 2011. That resistance is going to become support, just like $2,000 was the resistance in gold. From 2011 to 2024, it was resistance. It then became support, right? Resistance becomes support in bull markets. So we're going to blow through that double top, and 50 is going to be the new floor for silver. So get in now while it's a lot cheaper. Now, what is driving this? Why are gold prices, why are silver prices moving, right? For the reasons that I've been laying out for years now, but it's playing out right before your eyes on this giant stage. Look at what the Trump administration is doing to the Federal Reserve. I mean, up until now, they've at least had the pretense that the Fed was independent. Now, I've said that this was all BS, that there was no real independence, that behind the scenes, they were working hand in glove. Well, Trump dropped the pretense. He is now making it obvious to everybody that the Fed is political. He is stacking the Fed with his own cronies. He is coming up with dirt on people so he can fire them, so he can replace them with his own cronies. And he wants to move interest rates down. Why does he want to move interest rates down? He tells you, because we can't afford the rates. He says the U.S. government needs to save money. We need to cut back on our interest expense. He says the housing market can't handle these high mortgages. We need lower interest rates so people can afford to buy houses, right? So we're too broke for the interest rates that we have now, except the interest rates that we have now are low. They're just not as low as they used to be. And because we have so much debt, we need those super low interest rates. But the problem is those super low interest rates aren't going to work for our creditors. The people that are loaning us this money aren't going to keep loaning us money if rates go down. And in fact, when Powell cuts rates, I think long-term interest rates are going to rise. And that is going to really upset the Trump administration because the sole purpose of cutting short-term rates is to lower long-term rates. Well, the last time the Fed cut short-term rates, long-term rates went up. That's one of the reasons they stopped cutting, because they didn't want to put any more upward pressure on rates because rates are too low. And lowering them further is just going to unleash more inflation. But what's really going to unleash the inflation tsunami is going to be when the Fed goes back to QE, because that's exactly what a Trump-stacked Fed is going to do when the rate cuts don't work. When the rate cuts cause long-term interest rates to rise, then the Fed is going to have to start buying those bonds because the world is not going to want to buy them because they're going to see through the charade. If inflation is going up and the dollar is going down, why are foreigners going to want to lend us money? Why is anybody going to want to lend the U.S. government money. The U.S. government is telling all the creditors, we don't give a damn about you. We just want to lower the interest rates we pay you. As we debase the dollars, we pay you in. So people aren't going to want to buy the treasuries at the lower rates. So the only buyer is going to be the Fed. And the only way to do that is to create inflation by printing even more money. By the way, the dollar index closed the week down again, back below 98. I think it closed around 97.80. And yields on U.S. treasuries rose on the week. They didn't rise a lot, but look at the yield on the 30-year treasury at 4.92%. That's almost as high as it's been.
So there it is. Peter Schiff is clear. Silver at $50 won't be a dream, it'll be the new reality. The question is, will you move before that floor is locked in? Or will you look back wishing you had acted sooner? If this opened your eyes, do me a favor. Hit that like button, subscribe, and ring the bell so you never miss the next big update. And don't stop here. Check out the other videos on our channel for more insights from Schiff and the top voices in gold and silver. Your support keeps us going. And together, we'll stay ahead of the biggest shift in money we'll ever witness.